Tesla's Q3 earnings came out yesterday, and wow, what a past few days it's been for us Tesla investors. So in this video, I want to share with you the most key points from the earnings. We're going to touch on the good, the bad, and the damn right ugly. And then I'm going to be sharing my plans for my Tesla stock moving forward. I'm also going to be consolidating all of the most important Tesla, Palantir, and any other relevant news into a weekly newsletter. It's absolutely free to sign up, so check the description if you want to. The first one is coming this Sunday. So these earnings were a very highly anticipated event. They have followed a very difficult quarter. We have had price cuts, planned factory upgrades, which has of course negatively impacted production volume. And we saw this with the lower than predicted delivery numbers, and just the general macroeconomic situation has been far from favorable. So to give you the top line of earnings, if you're going to take just one thing from this call, it would be that Tesla missed estimates. They missed across the board. Having said that, there were some really optimistic things that did come out of the call that we're going to touch on. And I think that it's actually quite important to take all of these earnings with context. We know that at the moment, Tesla are struggling in the high interest rate environment, and this won't last forever. There will of course be times again in the future, as there has been in the past, that we see the macroeconomic situation not being good, and companies will be affected. But even maybe more importantly, we need to think about what the other companies in the industry are experiencing. And what I can say is that other companies, the competitors of Tesla if you will, Ford, GM and Lucid, they have not been having such a great time. Tesla has probably been doing a lot better. So I'm just going to give you the very overarching numbers, the statistics, and then we're going to move into some more interesting things. So revenue, the estimate was $24.06 billion. Tesla came in at $23.4 billion. Adjusted EPS estimate 74 cents. Tesla came in at 66 cents. Gross margin, the estimate was 18%. Tesla came in just short of this at 17.9%. And then we have free cash flow. Estimate $2.59 billion. Tesla, $848 million. So what you can see there is across the board, Tesla missed estimates. But one really good thing that came out of this call was the highlight that Tesla has a record of $26.1 billion sitting in cash. This is the highest amount they've ever had. It's a record for Tesla. And this amount of cash sitting there is really a testament to the financial strength and resilience that Tesla have shown. They've shown it before, and I'm sure they'll show it in the future. And it allows them to have this pot of money that they can throw into real innovation and growth prospects. And I'm sure they will continue to do just that. I have seen quite a number of people question what they're going to do as the cash gets bigger, and this amount of cash is obviously quite big. People are suggesting that they do a buyback scheme. Now, I think this may be possible in the future. I don't think we're going to see it now. I think they're very much going to focus on getting this cash reinvested into the business. But I do think that the buyback is going to happen way before we see dividends. I think that dividends are probably the lowest priority, then buybacks, then just general reinvesting into the business. And then we have this lovely, lovely graph here. So this is showing that Tesla have brought down their cost of goods sold per vehicle, their COGS, down by about $2,000 per vehicle over the last 3 quarters. So this is really, really impressive. And you can see it's the lowest it's been for quite a while now. And of course, we've just had those planned factory upgrades happening in Q3. So I expect that this only goes down from here even more. One thing that I was particularly excited about looking for in the earnings was more commentary and the numbers around the energy storage and generation business. And it didn't disappoint. Looking at the revenue here, we can see that year over year, there has been a 40% increase in the revenue. And just taking Q2 to Q3, we've seen an increase as well. Now, what I would say is it's more accurate to compare quarters to quarters, Q2 to Q2 the previous year. But either way, it's increasing, it's on the up. And then we saw this lovely graph, which shows that the energy storage deployed in Q3 has really increased. It's a 90% increase year over year. So energy is really taking off. And I said in my live before the earnings came out that I'm expecting in the near distant future to see that the automotive segment of Tesla's business starts diminishing as the other areas come up. And I think that with the mega packs and how in demand they are, we're really going to see the energy sector start accounting for more and more of Tesla. They highlighted that with a combined gross profit generation of over $0.5 billion in Q3, our energy generation and storage plus the other services have now become a really meaningful contributor of profitability for Tesla overall. Now, obviously, it's easier to gain massive percentage increases early on, but as a business area matures and starts ramping, you're not going to see those massive numbers continue. But still, I think there is a lot left in terms of growth for the energy sector. Unfortunately, we didn't see the same great news about solar. So Tesla obviously have their solar panels and their solar roof, and these products, in my opinion, are really good, but they don't seem to be taken off in the same way. Tesla put it down to just the high interest rate environments, but I hope they can sort this out in the future. Obviously, we have to talk about margins. Now, the automotive margins have been hit really bad, and they may continue to be hit going forward. We don't really know. Tesla are clearly struggling in a high interest rate environment. I do think, however, that they will rebound in the future. I guess we'll just have to wait and see what happens there. Obviously now we've got the factories being upgraded and things like that, so it is looking to improve, but we'll just have to wait and see. However, one really interesting thing that come out of this was that the energy business of Tesla is now the highest margin area. And this is without the factories being fully ramped up and without new megapack specific factories. So how good can the energy margin actually get? We also saw growth in the service area. Now, if you're wondering what the services and other revenue section of the earnings actually are, this includes supercharging, insurance, body shop, and part sales. The pay-per-use supercharging remains a profitable business. And this supercharging network is growing, and we're seeing more and more other companies make the transition to the North American charging standard and therefore getting access to Tesla's supercharging network. So it's very exciting. I'm really optimistic about this, and I can't wait to see what this means in the future and just how much money the supercharging network can actually make. Of course, just going back a little bit, we saw recently that BMW, which is including BMW, obviously, Rolls-Royce and Mini, made this transition as well. So we don't really have that many legacy automotive companies left to join. This was quite a nice graph. So this is showing that year over year market share is growing in all of the regions, which is obviously very good. And Model Y in particular remained the best selling vehicle of any kind in Europe year to date. And I can vouch for this. I'm definitely seeing more and more Teslas on the road here in the UK as time goes on. And then we had some very bullish commentary. This is something that we really need to speak about. And this is that Tesla are clearly continuing to be hyper focused on artificial intelligence. And they have now more than doubled their AI training compute. So why does it matter that Tesla have more than doubled their AI training compute? Well, it's because it helps accelerate them towards robotaxi. For a while now, Tesla's had the data advantage compared to their competitors. They have got loads and loads of cars out there using FSD, which is helping train the neural nets. And this means that eventually FSD will become, safe enough and good enough to be rolled out, and then we will have autonomous driving. But even so, for a long time, they have still struggled with the compute power. But this seems to be changing. And this now leads us on to FSD. So Elon said that FSD version 12 is making significant promise. But of course, FSD, Robotaxi Fleet, and Optimus, these are all just ideas right now. We don't have these baked in reality. They're not tangible at the moment. So I remain optimistic, but I do understand that Wall Street, can't really understand this and price it in because they don't have the numbers to it. It makes complete sense. But also we heard that, we heard the quite bullish statement that FSD has the potential to make Tesla the most valuable company on earth. And then he went on to say that they have the best AI team around and it continues to get better. And then we have this lovely graph. So this is showing the miles driven with FSD beta. And you can see it's been on a real steep incline. It's nearly at 600 million miles, which is absolutely insane. And we saw this inflection point happen around March, April sort of time. And I imagine this is going to go even steeper as more and more Tesla owners actually utilize FSD, which is of course going to happen as they've dropped the price of FSD from $15,000, I think, to $12,000. And obviously, the steeper this goes, the more potential Robotaxi fleet has of actually becoming a reality. And then we had some general commentary on Robotaxi and Optimus, which of course were both very upvoted questions in that Q&A management session. So basically, Elon said that they were very excited on the progress with autonomy. He made a point of saying they were really glad that they switched to all AI end-to-end, nothing but neural nets, and it's absolutely amazing. He said the same software approach will be utilized in Optimus, in the humanoid robot. It will learn by seeing, just like humans do. People were asking why the price dropped for FSD if it's getting better and Robotaxi is nearing. He kind of said what I predicted on the live that I did before earnings, and that is that they want to make it as affordable as possible. Of course, they want more people to have it, to actually use, to collect data, and then FSD gets better faster. He also said over time, the price of FSD will increase proportionate to its value. Current price is a temporary low. This makes sense. Obviously, it's in its trial period. People using it are literally doing Tesla a favor. So it's probably quite hard to price something that's not a fully up and running product yet. When he was asked about Robotaxi, he made very bullish comments. He said that the economics of autonomous driving is absolutely wild. And at the point that the Robotaxi happens, Tesla will actually be a hardware company with software margins. And then, of course, we had the news about the Cybertruck. Now, if you're a Tesla investor or you just like to keep up with this company, you probably already know this, but we finally heard some concrete details, some proper information about the Cybertruck. And that is, of course, that Cybertruck deliveries are beginning on November the 30th at Giga Texas. And we finally found out what the demand is. So they have over 1 million reservations. Up until this point, we have been using a crowdsourced reservation tracker, which of course may not be as accurate as it could be, and it seemed to have overinflated the numbers slightly, but still over 1 million is pretty impressive. Not all of these will translate into direct sales, but still the demand is clearly there. This was then paired with some not so optimistic news, and this is that Elon said production is going to be really, really tough. It's going to be hard, it's going to be costly, and it's going to take time. Because of the complexities of the Cybertruck, it's unlike anything they've ever made before. He said that eventually they will get to 250,000 vehicles per year, but that's not going to happen until at least 2025. He did say it is the best product that they've ever made, as he said before, but it does need to be affordable. It makes sense. In this current situation with high interest rates, people don't have the cash lying around to actually afford high ticket items. But it's really exciting because they are now entering a new market segment, the pickup truck segment, which I understand is very popular in the US. Now, I'm a Brit, I don't know. We don't like pickup trucks that much here. But in the US, it's going to shake things up. It's going to be a competitor to the Ford F-150, and it could be really, really positive for Tesla. Now, talking about affordability, they made some general comments on the Gen 3 vehicle, but not really, they didn't give too much detail. So he did say that it will be way more conventional, it will be way easier to ramp up than Cybertruck because they're not having to invent any new technologies. So we will see this being made in volumes, but we don't know when. We were not given any information on the timelines. And then some general thoughts on the call overall. People don't seem very happy. The new CFO was a little bit more nervous and people didn't seem to quite click with him as much as they did the previous one. And Elon in himself just seemed a little bit down, a little bit not so optimistic as normal. There was not really any clear answers given about margins. There was a real focus on the macro, and just the communication in general was not really what you'd expect on an earnings call. So now on to the stock. In the pre-market, the stock fell by about 7%, but the market's open right now, so let's take a look what's actually happening. Okay, right now Tesla stock is down by nearly 9%, and I think it's actually, looking at this, been down by slightly more than that even. Last 5 days, it's down by nearly 15%, so if you want to buy on the dip, this might be the time. So before earnings came out, I purchased some more Tesla stock. As my Patreon members will know, I let them know every single time I buy or sell any position, and we talk every day. I'll leave a link in the description. No pressure, but it's there if you want to. But what am I doing? So I'm going to continue to dollar cost average in because right now I just want to accumulate as many shares as I possibly can. However, I did say in my live yesterday that if we see the stock price fall to about 210, I will be buying more. and that still stands. I've got some cash waiting and I will deploy that into Tesla over the next few days, depending on what the stock does. And if it doesn't do what I need it to do, I'm just going to continue to dollar cost average, because we might end up seeing this stock go lower, it might go higher. It doesn't really matter to me in the long term, but I'll definitely make the most of the opportunity as the stock price does dip. And this happens a lot, right? When we have bad earnings or we have bad news, a lot of people sell out of their position because they freak out. And that's why it's really important to have a plan. You can stay level-headed, you can think strategically, and you can just think long-term. If you think this company is still intrinsically worth more in the future than it is today, then just keep accumulating. So let me know how you thought earnings went. What were your highlights? Let's be positive. What were your highlights from this call? And also, I just want to say a massive thank you to everyone that supports this channel. It means the absolute world to me. I'll see you in another video very shortly.